Welcome back. I'm your host, Darnell Jackson. In this crypto report, we're going to be talking about cryptocurrency and real estate adoption. These are two very valuable concepts. But before we do, make sure you subscribe to your favorite channel on YouTube, Darnell Jackson Crypto. Shout out to all the subscribers. All right, I want to jump over to the agenda. We're talking about how cryptocurrency is being adopted in real estate. Everybody is a real estate investor right now because real estate's on fire. And people look at cryptocurrency, the stock market, real estate, all as separate options. In this report, you're going to see how you can bring your real estate investments into the 21st century with cryptocurrency. You can get an idea of the direction things are headed. First thing I want to do is take a look at a couple tweets talking about real estate and Bitcoin. Here's a tweet from Dan Held. He's talking about buying Bitcoin today is like buying Manhattan real estate in the early 1900s. Here's a tweet from Documenting Bitcoin. It says with Bitcoin, it's possible to take an ownership stake in the entire internet of value. Think of it as digital real estate. I want to take a look at this image. Zoom so you can see it. And it shows the protocol TCP/IP with all of the websites that were built on the original internet: Facebook, Amazon, Google, Netflix. And you were allowed to participate in the application layer, which was the actual application, like Apple, the App Store, Netflix. But you couldn't participate in the protocol layer. Notice in this chart it shows no ownership possible. So now with what is being described Web 3.0, you have the chance to actually participate in all parts of it. Bitcoin, the network, and Bitcoin, the currency. So you can participate in the application layer and the protocol layer where ownership is possible. Now this extends even further when you start talking about Ethereum, where you have on the gray level here, which is the application level in Ethereum. Of course, now you have DeFi and NFTs and all types of different amazing applications that are built using the protocol. Okay, so here is another tweet. I want to show you this video from Udi Wertheimer. He's talking about this is digital real estate rent seeking. But before we get to that, I want to show you some headlines to bring you up to speed on what's happening in the real estate industry as it relates to cryptocurrency. Let's take a look at some stories from this spring. This story was big. This is about the software engineer who used his crypto to buy his $650,000 dream home. By Jacob Passy. You can't pay your closing costs with a Van Gogh. It's the same with your Bitcoin. Terrence Leonard funded the purchase of his dream home that had a large yard for his pet dog with his cryptocurrency profits. Terrence Leonard killed the game. When Terrence Leonard first started seriously investing in the cryptocurrency space in 2019, his original goal was to achieve financial independence. The long-term plan was to invest enough in crypto that he could cash out some of those investments, purchase real estate assets, and rent those out to earn additional income. That way he wouldn't necessarily need to work a traditional job to make ends meet. Notice the spelling check issue here. But then his ideal home came on the market. Leonard, who works as a software engineer in Washington, D.C., already owned a row home, but he wanted a home with a larger yard for his dog to play in and a garage. I thought, this is exactly what I want, Leonard said, and I'm ready to pull the trigger right now. To afford the $650,000 home, Leonard opted to use his cryptocurrency investments to cover a down payment and as proof of funds for the mortgage he took out to buy the home. He opted for a mortgage rather than buying the home outright because of the low interest rate environment. Okay, so this is, you're starting to see people think and use crypto to leverage into real estate. Okay, now I want you to take a look at another story where we're talking about really legitimate uses. Here is a story from Seminole County, Florida, where the county expects the new system to be faster and cheaper than regular card payments. Seminole County, Florida becomes first to try taking payment of Bitcoin, sort of. Okay, Seminole County, Florida will soon become probably the first local government in the U.S. to accept payments from citizens in Bitcoin, as well as its cousin cryptocurrency, Bitcoin Cash, sort of. All right, now we're not going to get caught up in the details of this story. The point is, you can see local governments moving into the direction of accepting crypto. And once this happens, then you can see, you'll see the merger of real estate benefiting from the value that crypto has. So here's a state and local governments across the U.S. have started examining blockchain, the transaction recording paradigm on which Bitcoin operates, for a number of potential uses. The clerk's office is trying out a system that records property deeds within a blockchain. West Virginia is running a pilot test of a blockchain-based voting system. Berkeley, California is considering issuing municipal bonds on blockchain. Now that is very substantial. All right, so let me jump to the newest story. This international story from Spain. Spain's opposition party introduces bill to allow mortgage payments with crypto. Presented by the opposition leading party, the project also includes the creation of a national crypto assets council. So this is very interesting. The leading opposition party in Spain has introduced a bill that will allow for the payment of mortgages with cryptocurrencies and create a national crypto assets council to analyze the implications of the use of crypto and blockchain in that country. According to the text of the Digital Transformation Law, homeowners would be able to use cryptocurrencies to pay their mortgages, while the real estate sector would be able to use crypto to invest in mortgage pools. Banks, on the other hand, would be able to use blockchain as a system to manage mortgages and insurance and streamline the payment of indemnities with digital currencies. This is very big. Obviously, if you remember the crash of 2008, 2009, where they had these mortgage-backed securities, the mortgage industry is always looking for a more valuable asset to back mortgages. And right now, there's nothing that has proven itself to be more valuable than cryptocurrency. All right. So now what I want to do is jump over to the video I was going to show you here on Twitter, where Udi Wertheimer is talking about this is digital real estate rent seeking. Let's check this out.
Filling those gaps with the goal of investor protection. To those currently or
this from the
Hi, this is Gary Genser.
Oh.
Hi, this is Gary Genser, and welcome back to Office Hours.
Gary Genser.
What does the SEC have to do with crypto? And why is the chair of the SEC talking about crypto? Now, technology has come along decade after decade, but those that have a chance to thrive, grow, come within a public policy framework. To be clear, I think that the SEC should be technology neutral. But one thing we're not neutral on is investor protection. Our agency, the SEC, has had rules for decades to protect people when companies want to raise money from them, or when we as investors buy and sell securities on an exchange like the New York Stock Exchange. But you see, crypto trading platforms, crypto lending platforms don't have the same level of investor protection that you've come to expect buying and selling stocks on a stock exchange or investing in a mutual fund or a 401k. In the years since Bitcoin was started, literally thousands of other tokens have been launched, many of which traded on platforms may well be securities under our laws. That means if the platforms and certain of the tokens don't register with the SEC, they're non-compliant with the important federal protections in our laws. So I've asked staff of the SEC to use all of our authorities anywhere we can to uncover any wrongdoing. Our authorities aren't enough. I've also recommended to Congress for them to consider filling those gaps with the goal of investor protection. To those currently or considering investing in crypto, please remember, not only are they a highly speculative asset class, but there are also significant gaps in the investor protection afforded to you. I think that moving forward, promoting investor protection is not only good for you and for anyone who would consider investing in these assets. I think that it's the only real viable path forward for this nascent technology.
All right, Gary, sorry, man. But I would agree that this is a rent seeker right here trying to explain confusion. So, want to definitely thank you for liking this video. If you did not like this video, share it with somebody who will. Watch some more videos until you find one that you like. If you don't find one you like, keep sharing it with somebody who might. Until the next time, tomorrow, peace.